And that's, of course, the Vodacom Group, and they came out today with their full-year results, and we've got the CEO in studio, Shameel Joosub. Thank you so much for making the time to join us. It's always good to have you. But let's talk a little bit about the overall performance. How would you say the health of Vodacom is on the back of these numbers?
I think the health of Vodacom is very strong. I think it was always going to be a difficult year in terms of, when you take a big mobile termination rate cut, where effectively, we took out 2 billion of revenue and 1.2 billion in EBITDA. But it was a rebase year to a large degree. And I think, if we look at the underlying performance, has been strong, and so it looks promising for the year ahead.
I'll come to Owen in a second, but for me, the two numbers that tell us the story really, Shameel, is revenue up 2%. Now, for a big company, it's difficult to grow revenue, but people come to expect growth, yet your customer base up 7%. So the revenue hasn't matched that. And you've got these MTR, the mobile termination rates down. So you've got to do things differently to keep that growth going.
Correct. And I think, so one of the big impacts was the mobile termination rate cut was, although we have a glide path that's been agreed, and we basically took the major impact in this current year.
Hence your mention of the low base now.
Correct. So it now contributes less than 5% of our revenues going forward. So that puts us in a much better position to grow going forward. The other big thing I would say is, yes, there's always a lag in terms of the customers and how you convert that into revenue. And the big positive for me was really the data growth. Data growth up 25% year on year. 23% in South Africa. So, a big opportunity for us, I would say, going forward in terms of data growth. And also exiting the fourth quarter, 31% data growth in South Africa, which I think is just been exceptional.
What about the overall industry play? I think I've just taken Owen's question out of his mouth. Let me let you go before I get excited about my industry question.
So interested. You were so interested in what he was saying, you forgot to ask
I saw the look on his face. Don't take my question.
It's always ladies first. No, look, my question really is about further revenue growth prospects going forward. How do you plan to drive that, especially given that the environment is really closing in terms of competition? You guys have been fighting in terms of giving us more incentives as clients all across the networks. Where do you see most of the growth coming from in Vodacom's numbers going forward?
I think, look, your big growth comes from data growth going forward, and also investment into new services like insurance and financial services and so on. But I think there's a lot of growth still left in data. Only 51% of our customers are currently using data, of which, so if you look at, we've got 32 million customers, 16.6 million are using data, 11.5 million have data-capable devices. So the first opportunity is just to get those customers that are not on data-capable devices to put them on proper, smartphones. And we see a significant uplift, almost tenfold, when a person moves from what I call a feature phone to a smartphone. So we're seeing a very good uplift, and then also our 4G coverage has been exceptional. So while other players basically responded to the mobile termination rate cut and the difficulty in the macro environment in South Africa by cutting down on investment, we speeded investment up. And essentially we're starting to see that result starting to come through in the fourth quarter, and I think will come through stronger into the new year.
Well, one of the things that you've just mentioned now, Shameel, is you've spoken about insurance and financial services, and this is a potentially new, exciting area of growth for you. Which markets are you hoping are going to take off the fastest, and where you're going to be driving the penetration of these products and services?
Well, I would say from a financial services perspective, M-Pesa is growing exceptionally well. So we've had a 23% growth in M-Pesa. We have 8 million customers. When to put into perspective, just in Tanzania, we move 18 billion rand a month through our M-Pesa platform. We've now moved into loans and savings. We have 1.8 million customers using that just in Tanzania. So that market's going quite well. And then throughout all our African footprint, we're basically finding very good growth in M-Pesa. The insurance part in South Africa is doing exceptionally well. So we've had 35% growth. It's already a 440 million business for us. Coming from insurance.
When you say insurance, is that insuring your cell phone, insuring your tablet? So it's sort of internal to you. Because when you talk about financial services, I worry, in the middle of the 2000s, I don't know if you remember, Owen, I remember the AA, the Automobile Association, wanting to lend me money.
And give you credit cards,
And First National Bank saying, we'll help you at the side of the road. So you've got to be careful what you get into.
That's true.
I wanted to ask about the smartphones and tablets. 30% increase there in the usage. So this is like where voice was, 15 years ago?
Correct.
And you far off capacity and far off saturation. How are you going to drive that? I mean, that's where the competition is. How are you going to drive that competition to get the market share?
Well, I think we're already doing that. I mean, just to give an example, the 8.6 billion we've invested in South Africa the last year has given us a fantastic lead in 4G. So we have doubled the coverage of our nearest competitor. Our 3G coverage is now sitting at 96%. So again, like a 30% difference between our nearest competitor. And then if you look at our drop call ratio, it's half that of our competitor.
I think half of those are mine.
Yeah. So you know, you'll end up in a situation where you basically much further ahead. And obviously there's always room for improvement, but you know, I think we've managed to create an advantage. We've also driven the cost of smartphones down. So this last year we sold 3 million low-cost devices. We sold 10 million devices in total, but 3 million were low cost. So we've got, you know, $40 smartphones, $75 basically tablets, and this coming year we'll drive that down even further. And so as you reduce the barrier to entry, you're seeing the uptake coming through.
What are the chances that you come under more pressure to reduce your mobile termination rates as an industry in general? And also, the one very interesting question I've always wanted to ask someone in your space is, with the advent of these WhatsApp calls, all these other free phone calls that are web-based, how are you guys going to mitigate that in terms of revenue generation? Because, you know, I can easily call someone in Dubai now from a WhatsApp call at the moment.
Yeah, so maybe, I mean, firstly, mobile termination rates is a glide path been agreed. So the massive impact's been taken in the first year. The next 2 years, so you've taken out a lot, and now contributes less than 5% of our service revenue in South Africa.
Yeah.
So essentially, I would say the big pain on mobile termination rates have already been taken, and has been taken in this last year. The second part is really when you look at things like WhatsApp calling and so on, I think it's still a very small part of let's say data traffic today, but I think you will find more and more these services will be carried over data networks, and so you'll have to ensure that your data is appropriately priced to accommodate for it. I do think, however, that regulators have to seriously look at what this means. What does it mean from a security perspective? What does it mean from a tax basis perspective? Because, you know, if people are basically using your networks and not having to pay for it, it will have an impact on the ecosystem. And operators have to make enough if you're basically going to continue to invest.
So you are concerned about these WhatsApp calls basically over the internet?
I think it's an industry phenomenon, and I think it will eventually you'll get to a point where you'll be selling everything as a carrier over data.
Final one, Shameel, as we wrap up, just in terms of some of the industry changes we've seen. Last week we had the CEO of Cell C saying that he's bringing this fight to your doorstep. He's offering consumers who are with Vodacom and MTN between 1,000 and 10,000 Rand to switch networks. And then I think a couple of weeks ago, David, we were talking about a new entrant, me, you, or you, me. I get those two people mixed up. But in essence, you've got bigger fights. How are you going to make sure that you stand your ground?
I think, you know, I think it's always important that you're implementing your own strategy and that you have a clear strategy that you're doing. And I think ours is very much premised on bringing down prices, but also by using investment to do that. So what we're doing is we're basically investing in our networks, creating clear differentiation, but also creating capacity. And then we're smartly bringing down pricing to be able to compete. And we've seen that success borne out, you know, in our success in the market, and I think we've outperformed our competition. And you know, I think we always welcome competition. I mean, it doesn't.
We'll have to stop there, Shameel. If I had my way, just scrap all mobile termination rates. You should be the first. Lead the market. Just cut them.
They were always very high.
It's already so low.
Thanks to Vodacom Group CEO Shameel Joosub.